Asian markets were higher as investors look ahead to the U.S. inflation report for the month of August. The Nikkei in Japan gained about 0.25%. The U.S. inflation report for August is the last big piece of economic data on the way before the Fed meets next week to decide its next interest rate move. Locally, we saw earnings from Mall of Africa owner Attack, Libstar and construction and materials group WBHO reporting its first annual loss in its full year. Meanwhile, Libstar, the owner of Danny Mushrooms, Lancewood Dairy and Goldcrest brands, said that it is working with police to investigate the cause of a fire that broke out at its Danny Mushroom farm in KwaZulu-Natal last week. It also announced that its CEO, Andries van Rensburg, will retire at the end of the year after co-founding the business in 2005. CFO Charles de Villiers, joined the company in 2017, will take the helm of the 3.9 billion rand company from January 1st of next year. But now to talk to us about markets and unpack what we can be expecting from that CPI number, we are joined by Martin Smith, who's a portfolio manager at Anchor Capital. Martin, thank you so much for your time. Your sense of the JSE performance right now ahead of that crucial CPI figure out of the US?
I think it's just waiting, to be honest, with somewhat of a bated breath. We've had a little bit of a bounce after that kind of precipitous fall we saw after Powell's comments at Jackson Hole. We saw kind of strength come through globally that obviously follows suit in the South African market. But I think at the moment we are very much on a wait and see. I mean, we've got about an hour or so until we get those numbers from the US CPI, and I think that's going to be a big driver of markets today and probably for the rest of this week.
Before we get into that CPI figure in terms of expectations, let's discuss Libstar's earnings. I mean, they're still seeing the impact of high input costs, especially when you look at margins across the categories. Were there any highlights for you when you looked at the figures?
So I think you used like the most important kind of term there, which is high input costs. So you saw a very nice revenue number come through, up 10% year on year. Obviously, these are the half-year numbers, but it's those high input costs, and that's going to be a big headwind for food producers in general, Libstar included. You've got that and a constrained consumer, which makes it quite a tough environment for them to operate in. But I think still a very good and a very resilient number is probably the way to put it from Libstar in a very tough environment. So I think that's the biggest thing that stood out for me is even with these headwinds, they've done quite well, but it's looking forward and saying, do they persist? And they probably still do. So something to keep an eye out for.
So back to US CPI figures. I mean, depending on what we get later in an hour or so, do you think that changes the calculation at all for the Fed?
I think so. If it's a very big kind of outlandish number or something that's very far from consensus. So just as a reminder, we're expecting 8.1 from a core headline number. From a headline perspective, and 6.1 from a core number perspective. So obviously core excludes food and energy costs. So it's going to be very interesting to see what happens there. I think core might come down a little bit more because you've obviously seen energy costs come off quite a lot to the last month or so. Obviously, the core side of things is a little bit more sticky. That's services, housing and the like. So interesting to see. We've also got to remember that there is a lag. We only started seeing interest rates really start to kind of rise aggressively in the last 2 to 3 months. And it does take time for monetary policy to actually kick in. So going to be interesting to see what happens. But yeah, like I said, we're all waiting with kind of bated breath.
You then look at the dollar's performance, which is starting to wane. And I'm wondering how much of that is dictating risk appetite coming back into the market.
I think you're right. There is some risk appetite coming in. And I think it's also the fears around recession easing a little bit, not quite expecting a soft landing, but also not quite expecting a full-on recession. So we kind of probabilities in the middle at the moment. But that fear abating or kind of pulling back a little bit has kind of pushed risk assets a little bit more. Obviously, safe haven assets have kind of sold up on the back of that. We're also going to remember that the dollar's been very strong for a while, so it's also probably due a breather. So it's a couple of things, risk appetite coming back, dollar kind of being a little bit overextended in the short term, and then obviously just fears around recession kind of pulling back just a little bit.
And I'm glad you brought up, the word recession and wondering whether the market is beginning to quantify what the US recession would be like, or is it partially buying into the idea that perhaps a soft landing is possible?
Yeah, I think partially is the right way to put it. Obviously, you've got different assets that have different probabilities. But if we look at kind of the two big ones, equities are, from a valuation perspective, around kind of average levels over time. So putting in some probability, but not kind of a massive amount of a proper recession. Bonds maybe a little bit more probability of a recession being factored in there if you look at kind of what bond prices and yields are doing. But also you've got to remember not all recessions are the same. It also depends why the recession is there. Is it something systemic like we saw in 08, 09, or is it something else? So just something to also consider. But at the moment, putting in a there and thereabout chance of probability, if that makes sense.
Before I let you go, you and I haven't really gotten an opportunity to discuss, SA results in its entirety. From the companies you look at from an anchor perspective, did the companies who have recently published earnings meet your expectations so far?
Yeah, I think we've also got to remember South African earnings season is a little bit different to what you see in the States. Obviously, in the States, it's all within a couple of weeks. Lots of aggregates kind of indicators there. So South African companies are quite nuanced, where you have to look at almost every single company or sector-specific stuff. But I think on the whole, the results have been very good. Specifically, you've seen from the resource companies, the banks have been very kind of held up very, very well. So on the whole, I'd say, yes, there are nuances and you can't kind of paint with a broad brushstroke. But on the whole, the results have been a lot better than expected. Management teams are doing well. You've got some good tailwinds for some other businesses like resources and the like. And then management kind of doing well from a cost perspective in difficult environments. For example, Libstar, like we spoke about earlier. So on the whole, I think South Africans companies holding up very, very well in a bit of a difficult environment.
Martin, let's leave it there. Thank you so much for your time. That is Martin Smith, who is a portfolio manager at Anchor Capital, giving us his perspective on the markets. We're going to take a quick break. We're going to have the CEO of Libstar talking to us about the year that was. So stay tuned for that.